any of these things that people want to push at you, like sell in May, go away, or the market's going to be up in the next year because it was up in January, it's going to be down in the next year because it was down in January, work sometimes, and just enough of the time to make people sometimes kind of want to really sort of, maybe if, believe it. So every year about this time, you get a certain amount of cacophony aimed at the concept, which is very old but false, called sell in May, go away. Now, as you probably know, pretty much every month, we take one topic from my book, Debunkery, and we go through some common thing that people say a lot, which is basically a false thing and you shouldn't use, even though people will say it. So this month being May, you're likely to hear a certain amount of sell in May, go away. And the concept behind this derives from the notion that the period between May and September or October, depending on who you talk to, is supposed to be an exceptionally weak period in the stock market, and that you'll do better if you own stocks from September, October sometime, one of them there, until the next May. And then don't own them in between. Sell in May, go away. Now, I'm just going to tell you that this has a lot to do with football. Now, I'm not opposed to football, and I'm not opposed to a month. I wouldn't be a very good football player myself. I played football a little bit when I was a little kid, and I got tackled a lot. But I'm going to tackle this one. The fact is, there's a lot of these things, like in my Wall Street Waltz book, I wrote a chapter on the legendary Super Bowl indicator, that the team that wins the Super Bowl, depending on which team it is supposed to indicate whether the stock market goes up or down based on the league the team comes from. You can see how ridiculous that is. You can see how that's such a silly concept. But so are all of the other concepts that have things like day of the week. I mean, there's people that have days of the week. They think you should sell on this day, buy on that day on a regular basis. Statistically, that's ridiculous. There's the so-called January feature, where if January's up, supposedly so is the market for the year. Well, mind you, if January's up, the year is more likely to be up than down because you got 1 out of 12 up and it's a head start, right? But if you actually look at the 12 months starting January 31st, moving forward, it's easy to see that it's perfectly random. Every month, however, will have a little higher or lower than average return by definition. Just as the same is true of a group of people. Some will be a little taller than average, some a little shorter, some a little skinnier, some a little heavier. Doesn't tell you anything about the average human condition that you would get out of all the people. In that same way, May does have a slightly below average long-term history, made up for by a very few months. May is a very few years, excuse me. It is also true that September is a month that on average has a slightly negative history, but made up of 4 particular Septembers. You take those out, the rest of it's positive. If you actually take the average return of June, July, August, they're actually above average. And the whole period from May to September is a positive return. From May to October is a positive return. And you get all those in the book listed. I'm not trying to hawk the book at you. You get an old copy if you want used for about 15 cents. But the fact is, you can see this statistically. Any of these things that people want to push at you, like sell in May, go away, or the market's going to be up in the next year because it was up in January, it's going to be down in the next year because it was down in January, work sometimes, and just enough of the time to make people sometimes kind of want to really sort of, maybe if, believe it. But the reality is they work about the same percentage of the time that the market's normally up or normally down. About 2/3 of the time it's up, about 2/3 of the time it's down. Sell in May works about 1/3 of the time. Last year, to 2022, January's down and the year's down. It worked then. But oh, by the way, sell in May, go away didn't really help you much because a lot of the decline was before you got to May. And most years, it just varies by the year, consistent with the fact that the market tends to be up about 2/3 of the time, down about 2/3 of the time, and there's nothing magic, despite what people may tell you, about the calendar year. Let me take a moment on that, if I may. People don't think about this. We, you, me, everybody else, comes from a background that used to be a long, long, long time ago before our time, overwhelmingly agricultural. When my grandfather was a boy, born in 1875 in San Francisco, most of American labor was agricultural. Today, 1.5% of American labor is agricultural. We don't really have a heavily agricultural society. We consume agricultural products. We use agricultural products like lumber. But the reality is the calendar is really important if you think about what you do relative to agriculture. If you want to go hunting, the calendar has some features that are important. But if you're making chlorine, or you're creating semiconductor chips, or you're in the service business, which is the economy's mostly service business today, but if you're just in the manufacturing business of most things, the calendar doesn't really so much fit in, but we still have this calendar, and people get overwhelmingly fixated on calendar events. And as it relates to the stock market, you can run statistical tests to tell if something like sell in May goes away. And you know what? None of them work. That's the point that I'm wanting you to see. All these end up being myths that should be debunked, and the best thing to do with a myth that should be debunked is throw it away. Thanks for listening to me. I very much hope you enjoyed this video as part of my series on debunking common market myths. To watch more videos like this, click the link on the screen and make sure to subscribe to Fisher Investments' YouTube channel. Thanks so much for listening to me.